Good morning, everyone. Little technical test. Are we live? We are live. Okay. Now, I do have a feeler trade on copper. It's a long, and I'm going to explain that in a minute. Just waiting to see some initiation here from buyers. If we can do a little ping back towards the initial balance and the value area that we've gone through, and if that doesn't happen, then we will have some very unique conditions that mean a possibility of a trending day on copper. But for now, we've gone pretty far out. So if I show you my equity volume candles, there's not much initiation from anyone just yet. Pretty good movement during Asia and the first part of London. But now, now that you've had a pretty decent move down, there is a very good chance of a mean reversion back up. So if that happens, there is a chance for the failed auction, and we are currently arriving at the average session range low for London. So let's see if we have a larger volatility day or not. Like I said, I'm running like a bit of a feeler trade just to see how things are doing. Another reason why I wanted to go long is, let me show you the daily chart. Daily chart, we had a consolidation for a few days, and then we battled through the little area of a resistance supply, however you want to call it. We went through it. And now we're sort of back inside that range. So right now there is a sign of an early trend change. So that's another reason why I don't necessarily want to go with this short move that we had. So really I'm looking for a bit of a single print fade to the upside. But there are some orders that I'm seeing on Bookmap around 1310, which is roughly around the initial balance low. So if we do get some initiation to the upside, I'm going to add another contract to the one that I'm doing now. So it's just like one lot, nothing crazy. Testing a hypothesis, testing a trading idea, and then waiting for the institutions to do whatever they want to do and see whether I'm on the right side or not. So that's my hypothesis number one, that after the value acceptance that we had going on earlier, that this average session range low is going to bring us a mean reversion into a failed auction long. So that's my hypo here. And we are kind of at that time of day when they like to fade moves as well. So I'm going to give it a bit of time. I would like to see a dedicated move above these EMAs that I have on the charts. This is a 5-minute chart here. This one is just a 1-minute chart. And I'm waiting for that volume to come in, and it's not really doing much for now. So until some more serious buying steps in, we're not going to see the move that I'm after. So yeah, let's be a bit patient here. All right, some housekeeping to do. So you guys know that we just released the nicknaming. So I have 2 combines here now. So there's because yesterday I didn't want to trade through FOMC, so I actually stayed away from my live account completely, and I needed something for fast markets just to make so that I don't like sit there and do no trades. So I decided to do another combine, but this is the London Copper combine. So that's the one that I've been doing since pretty much the start of this segment. And then I have the one from yesterday. Traded the YM, and that was pretty cool. YM is very smooth. Even during New York, I found it moves very predictably. And then once it does move, it doesn't do that like nervous intra-candle thing that you guys know that I'm not a huge fan of on NQ. So yeah, we're gonna see how that does. And All right, so some buying here is happening. Not terribly dedicated. Not terribly dedicated. Look at that. That's a little bit of movement. Good morning. Good morning. So this particular setup that I'm doing, it says mean reversion here, but it is a version of an auction fade that I'm attempting. And then sometimes you can get these extended moves that do fail in auction and then decide to rotate all the way through the initial balance. So I mean, that if that happens, this is going to be a big trade. But again, there is a danger that we're back in the range. We did accept the value area from yesterday. So yeah, for now things are not that clear, but I'm just using this average session range low as sort of my orientation point as to like what is happening. Very frequently average session range low for London can be a good bounce point, very high probability trade. So this is why I am fading this move, because typically you do get, you know, a nice bounce from it. Even if we don't get a full rotation through London, we should see a little bit of pullback. And then if it's only a partial move, I can kind of manage it. Of course, we did have the FOMC yesterday that could open up a possibility for the larger volatility day. And then also we have NFP tomorrow. So all of those are abnormal events, outliers that can bring a more, let's say, a higher chance of a unidirectional day, single direction day. And then if that happens, trade location is not going to matter much because you're going to be looking for a trending move down. And as long as you're not completely off the mark and jumping in randomly, we can find another entry. Now, another thing why I'm not too happy kind of jumping into shorts immediately here is because this is a pivotal point. You know, it's kind of an extension of these ranges, and we're sitting at the S1 supports right now. Very few days actually surpass S1. Maybe like NQ has days where it goes to S2 and S3. But yeah, it's kind of an area where I would think the shorts should be done for the most part. So yeah, a few things playing into this decision to fade the move. Mazg or Mazg says, do you trade European indices? Yeah, I trade Dax a lot. I don't really trade FTSE all that much. I did trade it probably about 7-8 years ago. But Dax has been the staple, and we are bringing Dax. I don't know whether you were watching Fast Market yesterday when I was on, but yeah, MP did say they are working on it. It's coming. They're having a bit of a bottleneck with the conversion, because European indices such as Dax, they have the tick value in euros. And yet all of our dashboards are obviously in USD. So they need to make sure that that conversion on the back end is not doing weird stuff, and that everything is sort of being tracked as it should be, and then sort of spewing out the P&L in USD rather than, you know, thinking that the tick value in euro is equivalent. And I know that we're sort of close to parity, so it's not that big of a deal, but they still need to make that work properly before they roll it out. It is probably only going to be on Topstep X, so keep that in mind. So yeah, we are going to get Eurex products on Topstep, which is going to be super exciting. I've been waiting for that for I don't know how long to come in. And yeah, they are finally working on that. So hopefully we get it. He couldn't tell us, like MP didn't know exactly when it's going to happen, but it's definitely coming at some point this year. While we're talking about Dax, why don't we have a look at Dax, shall we? Because again, I know we don't have it here. Sorry for the white charts, but I find them a bit easier when I'm not streaming live. Dax has been very range bound on the weekly chart. I always start my analysis from very, very large time frames. Now, you could call this a distribution after a rise up. It's a part of sort of Wyckoff system, but I mean, every support resistance system has the same sort of thing. You're looking for either a good trending move or a base. Now, this is definitely starting to consolidate, and it's been consolidating for quite a few months. So until we break this range, I wouldn't really be looking for any kind of wondrous moves, especially not during August. I can tell you that. So yeah, anytime we get into the bottom of the ranges, it's not a bad idea to start looking for longs. And when we get into sort of top ranges or top quarter of that range, not a bad idea to look for shorts. Now, obviously, as we start to drill into the day time frame, these things get a little bit more muddled, which is why you need some other ways to sift out exactly what's going on. And I use Market Profile for that. So this is just a daily chart. We have some demand, slightly lower down, but we already bounced there multiple times. So maybe 183.40 could be a good area to look for some further longs to fade this move. And then we go into profile. So what do we have in profile? We've opened with a pretty big gap, obviously a reaction from FOMC yesterday. What did the European indices? I actually went out for dinner yesterday, so I didn't actually watch FOMC, even though I said I was going to watch it with a beer. And whilst I did have a beer, I was not watching it. Actually. So yeah, let's see. So ES, yeah, that was a bit of a storm in a teacup, wasn't it? Christ. Okay, yeah, very glad I didn't get involved in that mess. How did everybody do? Like, did you trade the FOMC? Not that you should, but if you did, let me know how it went. I don't like trading FOMC, so this is why I stay out. Even if I'm like actively watching it, I'm just kind of more enjoying the show and the bounciness that comes with the press conference, because that's where the real party is. You know, the rate decision is one thing, and then there's like things kind of settle down, and it sort of lulls the new traders into thinking, oh yeah, okay, everything's done, I can trade now. And then he starts talking and everything just all hell breaks loose. So yeah, I can see there was like very big spikes on a 30-minute chart. I mean, these are like crazy, it's like 30 point moves in ES. I can't even imagine what NQ did. So I'm not even gonna stress myself out about that. Yeah, so yeah, don't think it changes the picture much. We're just touching the initial balance low, the initial balance high from yesterday in ES, and touching that area of demand from the press conference. So I wouldn't be surprised if they go up from here. So if we are going to look for some confluences there, and if we find that Dax is correlating with ES to some kind of a decent degree, that could be a nice correlation, maybe to fade this move into a failed auction. But I'm not going to front run this because I do want to see the failed auction happening first in Dax if I'm going to be getting involved, okay? All right, I'm not really getting the move that I want in copper, so I'm going to close this early. So just 125 on the chin, nothing bad, totally manageable, slightly taking it as an expense, really, because this was just, like I said, a feeler trade. So whenever I'm doing a feeler trade, it's not like, oh, it's a loss. No, it's an expense. It's cost of doing business. You're effectively testing the hypothesis, and as long as you're not, you know, scaling in massively and just totally, you know, what do they call it? Pull porking it, full porting it, then, you know, you can call it an expense, because that's what it is. You're just testing a hypothesis, seeing how the price reacts when you enter something, and now you're seeing a commitment to the downside. I'm also seeing some exhaustion of buyers, which means this is now more of a sell than anything else. So now I'm going to use these single prints to run a short, primarily because we have the single prints left behind, possibility of going down into that range, and in a way to limit risk, right? So how do we limit risk? Well, we have the single prints, and if we start to go into the single prints, that's going to mean a chop, a choppy day, right? So I still want to see commitment into this trending move down. There is settlement from yesterday COMEX, or copper settlement basically, which actually happened a little bit earlier. So let me just check something here, because I have my templates, which are probably, yeah, so this is slaved to gold. So settlement needs to happen at my 6 p.m., which is at around the same area. Okay, so basically now that I've tested the first hypothesis of fading the single prints, didn't work. The single prints that are left behind are now sort of a block that should stay there if we're going to have the move down, the continuation of the move down. And if we start to chop around and there's no initiation to either side, obviously that very much spells a quieter day. And that means that the move has already happened. There's not much you can do about it. But typically into the overlap, we tend to see a pretty decent move. Now, the overlap isn't for another sort of 90 minutes or so. So I might have some time to wait. But the level of interest now becomes the previous day's value area from sort of Tuesday from London, and this settlement area down here at 408.34, and then further down the value high from Tuesday, which is 407.24. So quite a bit of space there if we indeed start to fall into a trending day down. So this is how I approach possibility of trending days. I will almost always try to kind of fade them. And then if I get the single prints and I get some sort of structure that allows me to limit my risk in a trending day, I will take that. If we moved massively far away and those single prints were just huge, and then the resulting next candle that I'm looking at getting involved in is also massive, I will then stay out, because that would mean that my stop loss would need to go way below like sort of 17 to 22 ticks that I normally use on copper. But yeah, if we start to get that drop down, I will add more to this trade as it develops, if it starts to develop. But for now, we failed to go higher than the EMAs. We failed to initiate above those moving averages for any kind of a move, leaving single prints behind on the profile and smashing both through the average daily range low and average session range low as well. So both of those are very bearish signals for now. So I can't be holding on to the first idea that I had of this average session range low. So that brings me to my next hypo, which, by the way, I had these written out like somewhere else, right? But I'm just kind of doing it on the fly so you can see my thought process. So hypo 2 was that we are back inside the range that we tried to get out of. Back inside daily range. And then continuing on that thought process. So ASR low ignored. Value acceptance happened to the downside. But now we also have single prints on profile. So that's hypo 2, right? So basically a directional move down into some further areas. Jayhawk says, Dee, in Forex market, August is set to be the worst month to trade. Is it the same for futures market too? So I don't know about Forex. I mean, I know Forex used to be terribly slow, even when I traded it like 15 years ago. But futures recently, since COVID, we've, whoever said that, Forex terrible to trade. Now, Forex is a low liquidity market these days, right? Everything's locked down. Everybody has the same sort of interest rates, and you have to understand that the momentum in Forex generally. Let me start that again. Not enough caffeine. So the momentum in Forex in general comes from the differential between the two countries' interest rates that make up a Forex pair. So when both countries have the similar interest rate, there is not much momentum to be had. It's just like a fundamental function of the forex market, right? So the smaller the difference between the two countries' interest rates, the less momentum though that forex pair will have. And therein lies the issue. So back in 2008, we obviously had the austerity, we had the credit crunch, and then in 2012, austerity measures across Europe. And that brought most of the country's interest rates back down to zero. Some people even went negative, and that took away something that was known as the carry trade. The carry trade was a trade that you would do by doing, like buying the currency of the country that has a higher interest rate, and potentially selling the one with the lower interest rate. So, and then over time, that would bring profits, right? So that doesn't exist anymore. The carry trade sort of had a bit of a, I suppose, attempt at a revival when the Japanese, the yen, they kind of were flirting with the idea to start bringing their interest rates like sort of back up, and then everybody else decided to raise interest rates, but I'm not sure what they've done with theirs. I haven't actually been following that much, so let me just have a look quickly. Let's see where they are, because they were negative for a very long time. And then at one point, I think a couple of years ago, they're like, oh, are we going to have the carry trade back, the yen carry trade? And then I don't think anything came of it. Let me look at trading economics. Yeah, okay, so this, they're still pretty low. They're still 0.25, where the rest of the country. So I don't know, maybe a yen carry trade is a thing now again. but yeah, so the problem with most forex pairs is that they're slow anyways, and then you hit August, which is typically a pretty dead month. So all of that brings terrible low liquidity, and it gets very frustrating. Whoever comes to me trading forex, especially like things like euro dollar and stuff, some of the more major pairs, all of those countries have very similar interest rates at the moment. So euro dollar, I would expect it to be pretty slow on like vast majority of days. You might have like an outlier that brings in a bit of movement, but generally it's just like terrible. I got out of forex in 2012, and that's actually what brought me to prop trading, because I was a euro dollar swing trader for like 5-6 years of first, of my career, and then everything died, and I was looking for another market. I was trying to work it out intraday, and it was just terrible. So I got out of that, went into prop, found crude oil and some of these other products that we're trading, and that was 11 years ago. So I haven't actually been back trading forex since then, because every time I look at it, I just go, ugh, no. Because I look for a decent intraday movement before I'm going to get involved. And that decent intraday movement really has to be over 100 ticks a day. I mean, ideally for something like crude oil or, instruments that are more liquid, it really should be over 180, 200. So whenever we fall below the average session ranges of that kind of movement, I don't want to be involved. Maybe I'll do a scalp of like 30 ticks here and there, but it just gets very frustrating because you don't get movement. You enter a trade and you're just like, and come on, what's happening? So I don't like it to that. Like there's a limit to how much crazy momentum I want out of a product, but there's also a very big limit to how slow that movement can be. You don't want to be in a trade for 3 hours without it actually making movement. So if you're trading instruments that are doing that, consider switching it up. Consider looking for something else. So on the one side, we had crazy NQ that gives you, this is why we call it NASCrack, right? Because it's so crazy that however you enter, you either know that you're immediately wrong, or you will get some dedicated movement of about 40, 50 points in any single direction. And in crude oil, we had those kind of crazy movements all the way from like 2014 and then up to COVID. And then it went completely nuts, where we were having like days of 1,000 ticks per day. Then the futures went negative, and then they suspended trading for a while. So I needed something else also to trade. And luckily over the years I have, gotten enough experience on different products, and I've always traded gold and sort of metals here and there as my second product of choice. So I didn't have to change much. And I also traded ES, and I've been watching ES since the very start of my prop career. So that's 11 years now. Even though I don't like it as much, it is actually something that I trade a lot, especially during power hour. And in the last 30 minutes of trading, I will always do an ES trade. Sometimes that trade is what saves the rest of my day. So, yeah. So hopefully that helps. But yeah, Forex is very slow during the summer months in general. But if you have a look at the other markets that we've been trading, they've been wonderful. They've been lovely. They've been super, super lively. I mean, maybe we had 1 week of slow movement and everything was up, up and up, from there on out. So yeah, have a look at some other markets. You don't have to be married to the product that you're doing. Right, let's have a look. Can you show your stats? Well, I can only show you the stats we don't have stats for the live accounts, unfortunately, so that is not enabled. But I can show you the stats that I've had for this particular experiment since this started. Is this tracking this week? Oh, okay. I think there's a bug here. Oh no, sorry. I'm looking at the other thing. So here are my stats. So this is since I started. So what was that? Yeah. So that was 16th of July. And this is literally since we started this segment. So I've been trading this particular experiment on copper because, like I said, I haven't traded copper before. So I wasn't gonna just plow into something that I've never traded before immediately in the live. So I wanted, at least a couple of weeks to see whether there is merit to the levels and everything. So it's a forward test. This is what I use combines for. So yeah, some of my stats right now. Where are the stats? So trade win about 52%. Profit factor 3.3. Average win versus average loss. I'm sitting at about 3R. So yeah. So those are my stats currently. I wish that we could show you this on live, but we don't have it enabled on live, so we're gonna have to wait until that comes. They have priority over, their XFAs and SIM accounts to have all the new shiny features, and then at some point they roll it out for the live as well. So yeah, so we'll see. But yeah, this is the copper thing, the London session experiment that we've been doing, looking at levels, looking at how copper moves. And I typically run any trades that I have, I will let you know. I'm a low frequency trader. I don't trade a million trades a day. So usually I've been doing between about 3 and 4 trades on copper per day or per London. And I cut them off at the start of COMEX. So as soon as COMEX begins, whatever I was in, that gets clipped. So yeah, I don't know how my stats help you, so just focus on your stats because we're not the same. And my way of looking at the markets is not going to be the same as anyone else in here. Even if you give the same strategy to everybody, just a simple one entry, one trigger. You give it to 100 people, you're going to get 100 different results because we all have our self-limiting beliefs and money beliefs that play into this. So somebody will be too late to the party, somebody will be too early, some people will overmanage a trade. Whenever I say to people use 2R as a default, they will be extending that. And I'm like, why did you extend it? Because I wanted more. Well, that has nothing to do with the entry in the system. So, I don't know how my stats would help anybody else. But yeah, maybe try journaling. Actually, somebody asked me to show my journal from yesterday. Because I didn't trade yesterday, right? But I did do the journal. So I said no trades, quiet day ahead of FOMC on copper and gold, 60 ticks range, sideways candles. So it means that they're chopping in like a barcode. But I did say neutral day with a gap up. So gap up means we open above value, above range, but we ended up in a neutral day, extending the initial balance to both sides of that range. So I also said ADR high did give a neutral day fade short all the way to the Q low on the tight 5-minute range. That's how I journal, right? So I have some, it's mainly technical. So all I'm doing is like I didn't get involved, but I noted that some of my orientation levels did end up working out. And if I was going to look for a trade, ADR high, neutral day fade, yeah, that was, something that I may have been involved in, but again, the tight range kept me out of it. So I think that would be probably more useful to people to see how to journal properly, because some people go, dear diary, I was a Muppet today. How is that useful? Or I had someone who was coming to me, obviously he had been following me for a while, and he was thinking about getting into the Market Stalkers program, but, obviously I try to vet people before I'm going to work with them one-on-one in the gold. And I said, well, can you show me how you journal? And literally it was like, Muppet trade, reasons for entering a trade. And he goes, Muppet trade. Reasons for entering a trade, Muppet trade, like whole bunch of stuff, just Muppet trade, Muppet trade, Muppet trade. It's like, that doesn't help, okay? I said, even though it was a Muppet trade, you can attach some relevance to it, right? You can say, went against a directional move, against single prints, against, I don't know, FVG, like whatever system that you use, anything relating to price action and stuff, just put it down. It's like you might have been not reading the market well, but at least put what you were going against and why you thought that was going to work. That's going to be a lot more useful than going, oh yeah, Muppet trade, Muppet trade, Muppet trade, and then never actually explaining to yourself what the conditions were that you went against and therefore ended up in a losing trade. So, journaling efficiently is very important. And then, on the other end of the spectrum, you have people who are so systematic and analytical, usually engineers, and then they go into so many different conditions that they get lost completely. So you see how succinct I am in this particular journal. And if you go to this journal, I just said copper sustained auction down on open below value. So that's all I needed. And in fact, we're kind of seeing something similar today. Copper sustained auction down, but we had the open above value following the value acceptance, so slightly different. However, if I see that we open below value inside range and I get a sustained auction down, I will remember to try a trade. Okay. So, and yet I've seen some people who go into a journal, the engineers typically, and then they start with a million things. So they start, value acceptance happened at daily Q high, or that, it's like 150 lines of stuff that they've had happen around there. And then how are they going to take advantage of that? They kind of have 8 different hypos on the day. It's like we don't need 8 hypotheses. We need 3 or 4 in order to work out if there is an opportunity there or not. So be careful. Either end of the extremes when journaling is not good, because you need to be able to go back to those journals and go, hey, look, this is what happened. You know, this is what we should be doing. And so you need something that you can use, not something that's, you know, going to be so detailed that you can't take in any information from it at first glance, right? I mean, my journaling is probably too succinct now, but I know what I mean by that. Usually there's something that has time of day. So here's another entry: stop run into Asia low at 11:19 a.m. Previous development, open below value inside range. Reversal during initial balance from value. Attempted value acceptance. Resulted in a sustained auction short to double bottom Asia, right? So very, you know, succinct, but a lot of information and something that I can look at and go, okay, that happened. So I think that should be more useful to you. Right, we're getting a move with some volume now. So this is what I want to see when I get involved. See that? Big equi-volume candle stepping in. That tends to open up the possibility for more dedicated movement, more dedicated momentum down. So let's see how far this gets to. I'm not adding yet to this. I might add another if we start getting further move down. I don't like adding too much when I'm only in on one, especially not if it moves too far away. So if I'm in with one contract, usually on my live I would just stay in with one contract. But if I get to a point where I'm trading 4 and 5 lots, then I might add one. So that's the point where the average entry of the original position is not messing too much with another add-on. But whenever you add another contract onto the one that you already have and it moves away significantly, some of my products are not so crazy that they have crazy momentum that takes it away a million miles away from the entry. So when you add, you effectively mess up the average entry quite a bit. And that means your trade location goes. And then that means your stop loss goes as well. So unless you can justify moving the stop loss somewhere closer within the structure that's developing, it's just not a very good idea, because you're effectively going into another trade that's increasing your position size by 100%. So just think about that when you're randomly adding things like a crazy person. LFT says, hello Deeyana, how do you get your MT5 to look like that? To look like what? Do you mean the indicators? So these are my indicators, right? These are Blatek indicators. The three flagship Blatek indicators are Blatek Market Profile, Blatek Daily Range, and I also have Blatek Supply and Demand. I've just switched it off, but it is there. It's these boxes. There they are. I have the multi-time frame mode, so it's very to me it's just a very quick way to do things. Now Blatek MP, Blatek Market Profile, is an indicator that we've had for many years now, and it's used by thousands of people at this point, but it is on MetaTrader 5 at the moment exclusively. Well, actually it is on MetaTrader 4 as well, but you know, I don't really look at that much. I have my charting on MetaTrader 5 from AMP because this is CQG data. So one of the reasons why the symbols look the way they do, CPEU24 for copper, that is because CP is the copper signal from CQG. CQG is a very reliable futures data provider. AMP have some of the lowest commissions when it comes to live brokerages. And MT5 has been the platform that I've done my charting ever since my Forex days. That's where that comes from. And I'm just, very tied with that platform. It's very close to my heart, even though some people despise MetaTrader 5. I love it because I have a whole bunch of things. I don't love MT4. I've got to say, no. But the MT5, you can undock charts. So if you go to here, it says docked or undocked. So when it's docked, it goes back into its original area on the other screen. But if it's undocked, you can just put it anywhere that you want on the screen. You can control it. Another thing that I love is because when you have a crosshair and you start to drag it across the chart, it actually shows you the points and ticks very frequently. Like here it shows points. And you can very easily, and then you just go times 2 because that's the calculation on copper. So 17 ticks to initial balance high will be about 35 ticks. So 17 points equals 35 ticks. So it's very easy for me to do like any kind of measured moves if that's what I want to do. And Blatek market profile is very, very optimizable. It's something that I wanted. And I also have a pretty nifty feature of backtest right on the chart. So if I click Control, and actually first I switch on the Blatek backtest mode by pressing B, and then I start going back, it will actually show me every single level and the outlook, how the profile looked at the time, what the average ranges were doing, were they reactive, were they not reactive, did we fail the auction? Did the supply and demand level work out or not? So it doesn't erase candles, but to me, I don't need it to erase candles because I'm looking at, the profile components. Now, profile overlay is what you see here. So it's a graphical overlay. I wanted to have that on my charts because I got a little bit sick and tired of other platforms that had the profile in a completely different window. So every time you wanted to see how the price behaves around the levels, I always had to drag extra lines and try to, do weird things so that I can see, where are the single prints, where's this, what does that look like, are we coming into this area? I have no idea. So I had to always do like additional lines. So I always had to go this initial balance high, and then what price is that, and then I would plop it on the charts. So it was just a nightmare. And then when I worked with the software architect who designed all of this for me, I said to him, can we come up with a way to have some sort of an overlay on the charts candles? But that meant that we cannot have the TPO letters because it would just look very messy. Even though there is a TPO letters mode, if I can remember where it is. No. Yeah, okay, so this is, I haven't actually set this up properly to display just the TPOs, but you can set it up to actually just have the letters on the chart. So maybe if I extend the chart, let's go like this. Yeah, so here we go. So I've just extended the chart. So it's the same information that I have on the side. You can have it just on the chart. So this is called the TPO only mode. So if you just want to look at that, perfectly possible. But I don't like looking at just the TPOs. I like to have the graphical overlay, the candlesticks, and then the letters to the other side. So this is my setup. And then also if I want to see the volume profile from further back, sort of like a week or two, you can do that as well. This is highly customizable. You can see that we're still inside the value area. So that means we're still in that range. The value area from larger time frames can be useful when you're looking at larger movements. We can see there's a low volume node down here from 410.47 all the way down to 409.70 roughly. So I would expect the price to test that and maybe even go through it. So yeah, this is why I stick with it. That's how I get the MT5 to look like this, because these are block tick indicators. We stepped into the space with the mindset that we're going to be bringing a more professional set of tools to the retail trader. So that was the whole idea behind that. We're still battling this ASR low, but you know, there's nothing else for me to do here because there was a pretty big move to the downside. So we just have to wait. It's a bit of a slow movement down now. But yeah, it is the summertime, so we have to take that into consideration as well. So yeah, hopefully that clarifies things. So I have block tick market profile, block tick daily range, block tick supply and demand on the charts. That's what you see here. And that's how you can get these levels as well. So I have a YouTube video. So if you go on my YouTube and you go into block tick functionalities, one of the videos there is how I stack my block tick indicators. And I show you how I get the windows to be, some of them that I need the panels to be inside this bottom window. So all of that is explained there to great detail. So we're not going to go into that right now. All right, so Yarden says, are you trading also gold in the London session? I've been trading it lately. Micros, I really like it. Quoted a huge short today. I haven't been trading gold recently during London because I'm trying to be honest, gold to me slowed down a lot. Like, again, I'm not looking for singleton outlier days post FOMC when we're going to get a lot of movement. I want a dedicated 2-week average session range to go over a certain level that then tells me that every single day we have enough movement there. Now, unfortunately, gold just rolled into December and it took a long time to do that. Like, it took probably an entire 10 days to actually roll into December properly. And I didn't like that. I don't really like trading during the slow rollovers. And whenever gold is doing its slow rolls in the summer, that's what happens. Now that we've rolled and now we had FOMC, obviously that was a catalyst for some better movement this morning. But yeah, I haven't really been trading gold all that much recently. I've been mainly trading copper for London, and then a little bit of crude oil in the New York session. But mainly I've been trading ES towards the end of the day. So I've caught some really big moves recently in ES, and again, that's a part of the system and the structure that I have in my day. So I have one product that I will dedicate, 1 or 2 products for London, which is typically Dax, but obviously we don't have Dax yet. Oh, it's failing the auction now, but I still have 12 minutes before that is actually pegged, and I'm not going to front run it, so I might have a Dax trade coming up. Yeah, so, and then for the first part, post initial balancing COMEX or NYMEX, I will typically either do crude oil or RBOB, which is gasoline futures. And then if that either works or doesn't work, I will have a big sort of rest between there, usually a power nap as well. And then after that, I will look at the last hour of the day to find my ES trade. But I have been kind of trading a bit of YM. I quite like YM. Yesterday on Fast Markets, I found 3 really good trades and ended up like $1,000 on the day. So that was nice. And I don't think I traded more than 2 lots either. YM is pretty cheap. It's like $5 per tick. So with the smooth movement that it tends to have and not as many wicks and erratic movements such as some of the other things, you can actually size up a little bit more on it without being worried that you're going to get smacked in the face in like 3.5 seconds. Can I analyze gold? Yeah, I had a look at it yesterday. Unfortunately, AMP was very slow to roll, so I don't have that much data in the Z contract, but we are touching the all-time high supply. Again, sorry about the white charts. This is what my charts usually look like when I'm not on stream. We're having a really big reaction from the all-time high supply, which can happen sometimes. If this continues and if it is sustained, you can see some more movement as a correction. On this particular contract, the all-time highs are all the way up at 25.24.4. So we're quite a ways away from that. And with this movement, like I said, if it is sustained, we could be looking at a pullback. This gap is not a true gap. This is a contract gap. So they rolled pretty late. And this is why I'm going to avoid trading gold until we populate some more data, because right now it looks really weird to me. I don't have enough time series data, right? So what am I going to analyze? I have no idea. Like, what happened here? So maybe, you want to look at something like a continuous contract. Maybe that can provide a little bit more analysis. Let's find that. Now, whenever I look at the continuous contract, that also looks pretty strange. Let's go for, okay, so maybe this is going to be okay. These are probably the old versions of the indicators. Yeah, so the continuous contract looks a little bit more healthy, but obviously the levels will be different because it's not, this is kind of smushing in all of the contracts into the one thing. You can't trade this. This is just a general blend of all of the contracts. So whenever contracts roll, you will typically have some weird gaps happening that are not necessarily a part of the real current contract. So just keep that in mind. But yeah, even on this chart, we are kind of getting into this daily Q high area and reversing from it. If it's sustained, that's great. Let's have a look at what happened overnight, but I'm not sure how much data they actually have on this. Yeah, so you see, it's all a little bit strange. Yeah, so it's very difficult to work out when you don't have smooth movement. Let's go back to the current contract now. Maybe we have a couple of days worth of profiles. So let's start with Asian session. Extended downwards, went into the test of overnight VWAP and then just smashed down. It's now tagging the average session range for London. So again, similar outlook to what we have in copper. So this could be a single direction day. London from yesterday is quite far down. So technically, even though Tokyo went into a short, we are still opening with the gap down. This is a reaction from FOMC that pushed that so far away. So we could have a gap fill happening. And if that's the case, you might be looking for a short all the way down to 24.66, which is where the value high from yesterday is. Now that's London. New York value high, if we stay here, the New York value high is actually much closer at 24.75.5, and we're already touching that. So if you get to COMEX, we're still at this area. We didn't accept value. We didn't open inside value. There can be a possibility of a bounce upside. So just be careful there. But there's also a very good possibility for a value acceptance, which gives you a clear-cut entry. So if we open above value, then the first 30-minute candle goes to close inside the value area. There is a very big chance that you go into a full rotation to the other side of that value. So I know that I'm saying, oh, it's either going to go up or go down, but the difference is that we have clear pegged areas. Sorry, just one of my dogs touched my stand. We have clear-cut areas where we want to be getting involved on very clear-cut triggers, right? So it's not like, oh, it might go up or down in this area. No, if it accepts value by closing a 30-minute candle down, that opens up a possibility for continued rejection from that all-time high supply, or we're going to have a bounce away from that if we cannot close inside value, okay? So that's for COMEX today. That's later on. So that's my outlook on gold. All right, let's go through a few more minutes and then that will be it for today. I'm going to stay in this trade probably for a while to see what happens with it. And if you want to follow me on Twitter, you can see what happens with it later on. I'm going to post my stats like I normally do. How do you calculate value and range for the day and previous... missed one. Okay. And Masia says, futures trading halted like the whole market or specific instrument. Futures trading was halted during COVID in the summertime only on crude oil because the futures for crude oil went negative and most of the exchanges didn't know that can happen. They were like, well, we're not prepared. We don't have infrastructure. So they just suspended it for a few weeks and then they restarted again a little bit later in the year. Anastasios says, how do you calculate value and range for the day or previous day? It's actually a pretty not so simple equation. So you effectively have to start with wherever it opens, and then as the TPOs, so as the ticks start going up or down, you're effectively adding them up until you get to the 70% of the whole day's range, and that's where you stop. So that constitutes the previous day's value. Have a look in the Jim Dalton's books, like Markets in Profile. He explains how you get to the value area. So that is the calculation that we use to get to these values, right? So have a look at that. Our indicators is heavily based on the Dalton principles, even though in my methodology I've kind of moved on those principles, but the core principles are still there. You know, it's still the same thing. Danny Al-Thebe says, hey Dee, what are your tells in the market that indicate we're going into a trend or consolidation if you have any? Well, single prints are usually a pretty decent idea that we may have a trending day. If you start to see single prints left on the profile, whatever type of the day you have, even if you have a neutral day and then you have single prints left to the opposite side, so we already went down the other way and traversed the entire initial balance, and then it, like, let's say, goes into some mad value acceptance with single prints left. We had that in copper yesterday. That means just don't go against that. Sorry, we had that in copper 2 days ago, I think. So don't go against it and try to get a directional move out of it. There is a slightly rarer event that happens called a single print fade, where the market starts fading single prints, and then you can look to the end of those single prints as a potential reversal area. So this is what I did also, I think, 2 days ago in ES when I was on Markets Talking with Dee. Jay and I were talking about some levels, and then we had VWAP, and I also had single prints as a potential to run through them and then maybe reverse at the top. That's exactly what happened. And yeah, that was a pretty fun trade that happened during Power Hour, but me and Jay were actually discussing it an hour earlier. So that's the indication of a possibility of a trending day. It leaves single prints, keeps leaving single prints. So what we have here on copper is we left the single prints, but we're struggling to make a new new lower low, which is could mean two things. Either a very slow auction down, or we might have that single print fade. But for now, the single print fade is not giving me enough profit margin, so if that happens, I'm out. So I'm very selective with the types of trades that I want to see. But yeah, that's a pretty good thing to look out for. Okay, so Dee, what time do you draw London profile? From 8 a.m. London open all the way up to COMEX beginning, so 1:30 p.m. If you're trading equities like YM or something else, I will cut off my London profile calculations for the start of the cash session in New York. So I don't mix and match. I think it pollutes the data set if you try and mix and match. Hello, Deeyana. How to change Topstep active position results view in ticks? You go to chart and data. I've actually done that for my thing because I don't like looking at stuff. Let me see. So you go charts and data, and then you go change chart value display type in ticks. So you can have dollar, percent, or ticks, and I like to see it in ticks only. So yeah, hopefully that helps. All right, do we have any more questions? No, that's it. Okay, guys, let's finish it up here. Let's see what happens with this copper trade. If we start to go into a single print, obviously that's where my stop loss is, so that might be over. But until we're keeping this high at 412.75, I mean, this trade is still valid because we're still kind of at the top. We're still range bound. And in fact, if I was Dolby, you would probably want to get involved at the top for a short. However, I was looking for a directional move, so now that's looking like it's not the best trade location. But again, that's hindsight capital because I didn't know it was going to start going into a range. And then you just have to manage it from there. You know, you could maybe try exit that and maybe try snipe it from the top, and then that will give you a very, very good entry into directional move. But for now, I'm going to stick with this. So until we go higher, that is trade still valid. So the invalidation point is if we go into a new higher high and we hold above it. So not just go above it, but we also need to hold into that area. All right, guys, thank you so much for hanging with me. We do have NFP tomorrow, so don't do anything silly. Don't trade into it. Make sure you're flat into the NFP. Don't gamble. We're not here to gamble. Let's see what the next week brings, because this is my last day for this week, so I'm not going to be here tomorrow. I will see you again on Monday, bright and early, bright-eyed and bushy-tailed, for another London session. So thank you for hanging with me. I will see you then.